Right now, millions of Americans are waiting for one critical decision. A decision that could shake the stock market, the housing market, the job market, and even the value of the US dollar. I'm talking about the Federal Reserve's potential rate cut, a move that can impact every American, whether they realize it or not. In this short breakdown, here's what you need to know. The Federal Reserve is the central bank of the United States, and whenever it changes interest rates, the entire economy feels it. When interest rates go up, borrowing becomes expensive. When they go down, borrowing becomes cheaper, and that single shift can influence your credit cards, your mortgage, your auto loans, your investments, and your savings. A rate cut can lower interest on loans, make mortgages more affordable, encourage spending, create jobs, and push businesses to grow. That's why Americans search for rate cut news every single day, because one change can alter everyday life. But a rate cut isn't always a good sign. Sometimes the Fed cuts rates because the economy is slowing down. Yes, the stock market might rise, but it also signals weakness that needs support. Smart investors never follow hype, they follow information. In the stock market, big tech companies like Apple, Amazon, Google, and Tesla usually benefit when interest rates drop. Investors move money away from cash and bonds towards stocks, making the S&P 500 historically stronger after major rate cuts, as long as the economy isn't in recession. That's why you must watch indicators like GDP growth, job numbers, inflation, and earnings. The housing market reacts too. Lower rates mean cheaper mortgages, higher demand, and rising home prices. Timing matters. Buy strategically, not emotionally. Savings accounts can take a hit because high-yield APYs may fall. That's why you should diversify. Some savings in high-yield accounts, some in short-term treasuries, and some in long-term growth investments. So what should investors do when a rate cut is coming? Don't panic. Don't rush. Rate cuts take time to show results. Strengthen your long-term portfolio. Diversify across sectors. Watch inflation closely. And always keep some cash ready for market dips. The best investors wait for red days. A rate cut can also weaken the US dollar, affecting commodity prices and global trade. An important detail for anyone investing in international companies or ETFs. In the end, your financial success in 2025 depends on one rule. Don't make decisions based on fear or hype. Make them based on data. Follow the economic calendar, listen to expert analysis, track inflation reports, and stay informed. If you care about your financial future, you're already ahead of millions. Stay focused, stay educated, and invest with patience, not